Are you torn between investing in the Fidelity Large Cap Growth Index Fund and the Fidelity Real Estate Index Fund? Each offers unique opportunities to grow your wealth, but which one is right for your portfolio? Stick around as we break down the performance, strategy, and key differences between these two powerhouse funds. Let's start with the Fidelity Large Cap Growth Index Fund, or FSPGX. This fund focuses on large cap US companies with explosive growth potential. Imagine investing in giants like Apple, Microsoft, and NVIDIA, all part of its top holdings. Since its inception in 2016, it has delivered an impressive average annual return of 18.08%. Last year alone, the fund soared by 43.77%, a testament to its growth-oriented strategy. And the best part? It's cost efficient with a low expense ratio of just 0.035%. That means more of your money goes to work for you. But keep in mind, growth stocks can be volatile, so this fund is better suited for long-term investors with a higher risk tolerance. On the other hand, we have the Fidelity Real Estate Index Fund, or FSRNX. This fund specializes in US real estate investments, including REITs like Prologis, American Tower, and Equinix. If you're looking to diversify your portfolio with tangible assets, real estate might be your go-to. FSRNX has had a mixed performance in recent years. Over the past year, it returned 23.23%, but its 10-year average stands at 4.84%. While it may not match the explosive growth of FSPGX, it offers a unique advantage: dividend income. REITs are known for paying regular dividends, making FSRNX an attractive option for income-focused investors. And just like FSPGX, this fund is easy on the wallet, with an expense ratio of only 0.07%. However, real estate investments can be sensitive to economic cycles and interest rate changes. So, it's important to consider these factors before diving in. So, how do you decide between the two? If your goal is capital appreciation and you're okay with the market volatility, FSPGX is your ticket to growth. But if you're after steady income and sector-specific exposure, FSRNX might be the better choice. Let's talk about diversification. FSPGX gives you exposure to a broad range of sectors with a heavy focus on technology. In contrast, FSRNX concentrates on real estate, which can add stability and tangible assets class to your portfolio. And what about risk? Growth stocks like those in FSPGX tend to be more volatile, especially during market downturns. Meanwhile, FSRNX faces risks tied to the real estate market, such as rising interest rates and economic slowdowns. Here's a pro tip. You don't have to choose just one. Combining these funds could give you the best of both worlds: capital growth from FSPGX and steady income from FSRNX. It's all about balancing your portfolio to fit your financial goals. Let's look at some numbers again. Over 5 years, FSPGX delivered an astounding 18.97% annualized return. Meanwhile, FSRNX, while not as aggressive, offered a stable 2.33% return in the same period. Think about what matters more to you: rapid growth or consistent income. And don't forget about the tax advantages. Real estate investments like those in FSRNX often come with tax benefits, while FSPGX's growth-focused strategy may lead to higher capital gains taxes when you sell shares. Ultimately, the choice boils down to your investment style. Are you a growth chaser, ready to ride the highs and lows of the markets with FSPGX? Or are you an income seeker looking for stability through dividends with FSRNX? Whichever you choose, Fidelity's low expense ratio ensures you are getting value for your money. Both funds offer a solid foundation for building long-term wealth, so the decision lies in aligning them with your personal goals. If you are still unsure, consult with a financial advisor to tailor these options to your unique needs. And remember, the best investment is the one that fits your strategy and helps you sleep well at night. So, which fund will you choose? FSPGX, the growth powerhouse, or FSRNX, the real estate income generator? Let us know in the comments below, and if you found this comparison helpful, hit the like button, subscribe to our channel, and turn on notification bell for more investment insights. Until next time. Till then, happy investing.